This is your technical update from the LMAX Exchange Research and Analytics Desk for Wednesday, May 4th, 2016. Euro dollar. So the euro was looking a little bit stretched as the market traded up above 115 and through 116, with daily studies tracking in overbought territory. In conjunction with this stretched nature of the studies, we also saw the market trading into some medium-term resistance ahead of above 115 and ahead of that critical August 2015 peak at 117.09. And so the market was probably going to have a hard time up by those up by the levels above 115, and we've since seen a nasty reversal on Tuesday, which has opened the door for additional setbacks into early Wednesday trade. At this point, it is possible that this high that we saw on Tuesday, just above that 2016 high, just above 116 at 116.617, is now some form of an interim top ahead of what could be the next round of major declines. But ultimately, we would need to see a break back below 112.17. That's the low going back to the 25th of April to officially take the pressure off the top side. Sterling dollar. So cable saw some impressive gains over the past several days, with the market surging above some critical medium-term resistance at 46.70 on Tuesday. But the market was unable to establish a close above 46.70. Moreover, the market really was unable to establish a close above 46.70 after putting in an intense bearish outside day formation on Tuesday. This sets the stage for a potential resumption of declines in this market back down towards the 141 to 140 area in the sessions ahead. Again, while the market holds below 146.70 on a daily close basis, the overall pressure does remain on the downside. Dollar yen. So dollar yen is attempting a little bit of a bounce after the market traded down just shy of key psychological barriers at 105 on Tuesday. At this point, any rallies are still, however, viewed as corrective, with the market expected to find some formidable resistance into the 109 to 110 area. Ultimately, it would take a break back above 111.89 to take the immediate pressure off the downside. Euro Swiss. So Euro Swiss has been trading within a consolidation over the past several weeks, though overall the recovery structure here is intact, with the market looking to break higher. A break above recent highs at 110.24 would accelerate gains and expose a retest of the multi-month highs at 112 further up. Any setbacks here should be very well supported into 108. Aussie dollar. So Aussie has rolled over in recent trade after putting in a recent 2016 high at 78.35. This latest breakdown below 74.77 could open the door for a resumption of declines and acceleration to the downside, though we would need to see a break and close below 74.77 to confirm and again officially shift the structure and open that acceleration to the downside. Inability to close below 74.77 will still keep the pressure on an overall basis on the top side. Dollar CAD. So a very intense bullish outside day formation on Tuesday, with the market reversing off 10-month and 2016 lows at 124.61. At this point, the reversal was overdue and could open the door for additional upside in the sessions ahead, but we would need to see a break back above 29.90 to really take the pressure off the downside and suggest this market is seeing a more significant structural shift. Kiwi dollar. So Kiwi had recently stalled out just shy of the previous 2016 peak that was set back in mid to late April, and the market has reversed back below 70. At this point, it continues to show signs of strong, formidable resistance up above 70, with the market preferring to trade back below the figure and potentially look for a more meaningful bearish resumption. But a break back below 67.59 would really officially be required to force a shift and put the pressure back on the downside. SPX 500. So the S&P 500 looks to be slowly carving out another top after stalling above 2100, and it will be interesting to see if this can accelerate to the downside. A break back below 2021, that low that we saw on the 24th of March, would do a good job of confirming and accelerating declines back towards eventually the 2016 low just over 1800. Inability to break down, followed by a pushback above that recent high at 2112, would open the door for a retest of the record high from 2015, a little above there. Gold. So gold has seen a bit of a pullback after stalling just shy of the 2015 peak at 1307, but any setback should be very well supported here, with the overall structure favoring an eventual break above 1307 and towards the 1400 area further up. Look for this current round of setbacks to be very well supported down and well ahead of 1200, with ultimately only a break back below 1190 to really compromise the newly adopted bullish outlook for gold.